Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets and the Independent Trading Group, we're very pleased you have joined us for the Blockchain and Digital Assets Conference. The next live presentation is from Stacks Asia Foundation. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Kyle Ellicott, Executive Director of Stacks Asia Foundation. Welcome, Kyle.
Hey, everybody. Thank you very much, Greg. It's an honor to be here today to present what's happening across the greater Bitcoin ecosystem. As Greg noted, my name is Kyle Ellicott. I am the Executive Director of the Stacks Asia Foundation and have had the pleasure of participating, supporting, and contributing to the greater Bitcoin ecosystem for the last 5 years. And today I want to talk to you about where Bitcoin is evolving to and how that has changed from the Bitcoin you knew as a store of value to what Bitcoin is becoming, and the technology and infrastructure such as layer 2s and others that are helping to power that greater $2 trillion Bitcoin economy in front of us. Back in 2009, Bitcoin not only was started, but also gave birth to this entire industry that we know of digital assets, and has not slowed down since and has continued to dominate the entire digital asset industry. While its all-time highs are sitting where we are today, we are also seeing its dominance around 65% and growing of the entire digital asset industry. And with that, something has changed dramatically in the last few years around Bitcoin. Previously, Bitcoin was known as that sleepy asset, that store of value, but suddenly Bitcoin has not only begun to become dominant in the digital asset markets, but also in institutions and corporates along with retail, as we're starting to see acceptance across the board globally for Bitcoin to be entered into balance sheets, a part of reserves, a part of treasuries, and much more. And what's exciting about this is now we've started to see Bitcoin starting to separate itself as once a network into a distinguished asset class. Right now, we have over 140 companies, public companies that are having Bitcoin on their balance sheet or as a treasury asset. And we're also seeing more than a dozen sovereign wealth funds and sovereigns in general as countries starting to add BTC, Bitcoin, onto their balance sheet. And starting to see globally a shift in policy, a shift in regulation, and a very dramatic shift in terms of openness towards Bitcoin's dominance and its position within the industry as a whole, and again, as an asset class as well. A lot of this was driven by demand starting last year in 2024 with the launch of over a dozen spot ETFs that over the year we saw over $40 billion of inflows and has continued to see a greater number of all-time highs coming this year as well. And that's only begun to open up a greater wave of institutional adoption that we're starting to see now here in the beginning of 2025. However, as Bitcoin has continued to grow in its dominance, one thing that has made Bitcoin great is that Bitcoin has stayed a very strong, a very durable network and asset, but it doesn't really change very much. And that is part of its big strength, is that it's a very simple protocol. We don't see a lot of change. Things are very stable. Its uptime is there, but when it comes to programmability and the idea of making Bitcoin programmable and it being usable, whether that be payments or DeFi, earning yields, it's kind of been this holy grail for the last almost 16 years for everyone trying to figure out how to unlock. And again, Bitcoin has given us that stability and security that we've looked for, whereas other networks have grown and scaled around programmability, have opened up greater UX and experience. But again, we've always come back to Bitcoin. How can we leverage that stability? How can we leverage that security? And how can we find faster block times instead of transactions taking, say, 10 to 60 plus minutes, and instead learn the lessons of what we saw with Ethereum or Solana or other networks and actually see those transaction times come down to sub-seconds, to see that security continue to be utilized, and also add programmability to unlock over $2 trillion and growing of Bitcoin capital that has otherwise sat very idle for the last almost 16 years now as well. This holy grail problem has, again, sat here historically within Bitcoin. In its almost first dozen years, Bitcoin was known as digital gold, a store of value, a very foundational setting period that saw the beginnings and the early introductions of RWAs, real world assets, the beginnings of NFTs, the beginnings of this entire industry that was birthed. And as a digital gold, we also saw a few different networks, stacks included, that were launched between 2025 and 2019, 2015 and 2019, that would all start to unlock these new features for Bitcoin to do something more. And from a stacks perspective, we looked at unlocking programmability. And moving after that into this experimental era, the last 4 years have given the rise of everything you might have heard of around Bitcoin. Bitcoin layers, Bitcoin L2s, this entire infrastructural piece that has made Bitcoin, once sleepy, now start to awaken and actually look towards having usability. And during that time, we saw over 80 different layers. We saw builders start to come back into Bitcoin, wanting to build and leverage Bitcoin stability and security, and also see how Bitcoin could do, again, something more, which has kicked off here in 2025 in this dominance, this productive era for Bitcoin that has begun to unlock Bitcoin no longer as a store of value, but also as a productive asset that could enter into DeFi, that could enter into yield, and no longer just be, again, a sleepy asset, but now a productive and a passive income generating asset as well. And this opportunity has only continued to blossom. Today, if we look at the entire market cap of Bitcoin, so just over $2 trillion, and we look at a comparable network of what an opportunity could look like. In Ethereum today, we sit just over $300 billion in total value or market cap. And the amount of value locked away in applications, stable coins, DeFi, and the like sits around 32% of that market cap, $100 billion. We bring that comparable into Bitcoin. It's our closest one across the industry. That sets an almost $700 billion opportunity of untapped potential. Today, we're seeing around 8 billion of that utilized. At the end of last year, we were just around 6.5 billion. So in the first 6 months of this year, we've seen a growth of $2.5 billion of additional value start to enter into the Bitcoin ecosystem, growing faster and faster month by month. And again, now we're seeing this unlocked, this untapped, almost $700 billion of potential in terms of Bitcoin and what could be unlocked. And what's very unique about Bitcoin and building on Bitcoin, unlike any other network, is today we have almost 50 million wallets, unique wallets active that exist around the world with more than $1 of BTC sitting in them. So there's an inherent user base of almost 50 million individuals out there that have Bitcoin ready to look at what they can do with Bitcoin in a productive manner. That's not including what's sitting in things like ETFs or in Bitcoin yield funds that are starting to emerge as well. And that's where Stacks enters the picture and a lot of what we are focusing on as a greater ecosystem. Stacks launched back in 2017, and since our mainnet in 2021, have continued to work towards bringing programmability and smart contracts to Bitcoin to open up the entire Bitcoin economy. Something that Satoshi Nakamoto, when launched in 2009, began. We have now picked up that journey along with all the developers, the teams, and this greater ecosystem continuing on that journey as well to make Bitcoin programmable, make Bitcoin productive. And today, as Stacks continues to grow, we look beyond just programmability and some of the recent launches that we've had in the last year. So once block times took 10 to 60 plus generous minutes being built on Bitcoin, and last year we launched the Nakamoto upgrade that helped to bring sub-second transactions across the Stacks ecosystem and therefore those building on Bitcoin. So now the Stacks layer transactions are 100% secured by Bitcoin hash power and are the fastest across any network building on Bitcoin today. So not only do you have speed, but you have strong security leveraging that core Bitcoin layer or Bitcoin network underlining as well. And from a transaction standpoint, as transactions happen on sub-seconds, as one Bitcoin block goes by on the Stacks network, those transactions are dropped down onto the Bitcoin network and again, secured with 100% hash power of the Bitcoin network. So this enables cheap, fast transfers of Bitcoin and unlocks that programmability layer along with things like stablecoin payments to DeFi, all backed by Bitcoin. And we also launched SBTC. And SBTC kicked off the tokenized Bitcoin space for us on Stacks. And that is a one-to-one representation and minted asset that allows you to move your Bitcoin from the L1 onto a secondary layer and into applications. And since December 17th, when we launched that, in 3 different cap, we have seen over 5,000 Bitcoin come into that system, now earning a passive income yield as well. First cap filled in 72 hours of 1,000 BTC. Our second cap in February of 2,000 filled in just under a day. And in May this year, we brought over 2,000 additional Bitcoin into our SBTC program in under 3 hours to begin earning a yield for the first time as well. And institutions have been involved in this as well, retail and institutions. We've seen companies like UTXO and Jump, along with many others, begin to see the opportunity, see the value of earning passive income of a once sleepy asset. And Stacks as a history has seen early success. Going back to our foundation, in 2019, as a blue chip asset, we did the first ever and approved SEC qualified token offering. We worked with the SEC back in 2019 on what it would look like for a token, not only to do a token offering, but what would it look like if a token was a security and how to go into a regulated structure for the future of how digital assets would evolve to today. We've continued to see and welcome developers across the industry and are now seeing the largest developer set when it comes to building on Bitcoin and 7th overall across the entire industry, according to Electric Capital. And are continuing to see all-time highs of not just developers and TVL, but also new applications coming through, and have since also begun integrations with additional networks to drive their Bitcoin ecosystems from Aptos, Solana, and most recently, Sui, which means Stacks and Bitcoin will help to power the Bitcoin ecosystems that sit on these and other respected networks as well. And the unique piece about Stacks, as it's incredibly decentralized, is that anybody can run a node, anybody can be a validator on the network. We're very fortunate enough to work with so many large institutions who help to support and stand up the network as well. These institutional operators and signers on our network help to validate transactions across the board so that for you, building or participating in on the Stacks network, know that you have the institutional names, the household names, the biggest brands across the industry supporting that network, making sure that all those transactions are valid across the board. Now, what's also very unique is our consensus. So from a consensus standpoint on Stacks, it is derived and supported by Bitcoin. What's very unique for those that are looking as investors or traders out there is what I call the Bitcoin in, Bitcoin out waterfall. Is that if you have Bitcoin and you are looking to earn that additional passive income, that additional Bitcoin yield, there's a very unique opportunity within Stacks where your Bitcoin no longer has to set passive. Instead, you can actually earn off of it. So Stacks holders, STX holders, are able to stack or stake their STX and earn a yield of Bitcoin back in return. You can take that same Bitcoin, deposit it into SBTC and mint your version of SBTC and earn an additional 3 to 4% APY Bitcoin in return. And it allows this waterfall mechanism of securing both the Stacks and Bitcoin network to each other and leveraging that stability, leveraging that security, leveraging that hash power, but also allows you, those that are holding Bitcoin, to earn off of your Bitcoin and participate in this passive income as well. And in every time, SBTC is one-to-one backed the entire way through to Bitcoin as well. You always remain liquid and automatically distributed awards every 2 weeks as well. And that's not all. Once you have SBTC, there's an entire DeFi ecosystem that is there for earning more additional income or passive income off of your BTC. An entire DeFi ecosystem, everything from low risk, low reward, just hold your SBTC in a wallet or in an institutional custodian, Hex Trust, Fortify, BitGo, and many others, and just earn a core yield. Or enter into DeFi with a little bit more higher risk, higher profile, and higher return, whether it be perps, it's Bitcoin-backed stablecoins, it's institutional lending, borrowing, and much more as well. And that's not all. We're now looking and working with larger institutions at the opportunity of doing more with their Bitcoin and going from a trust minimize security set to a trustless environment, looking to unlock more Bitcoin liquidity. Today sits around 1.5 to about 1.75% of Bitcoin's total market cap in Bitcoin DeFi or around these types of assets as I'm speaking about today. We're working with qualified institutional custodians to provide support, not just for SBTC, but also for these other networks I mentioned, Solana, Sui, Aptos, and as well. And the idea of segregated address and actual minting directly through the custodians. And are also pushing forward to self-custodial SBTC, where those transactions, those payments, anything that you're looking to do with Bitcoin and with your SBTC sits in your hand as well. And we start to open up a greater DeFi ecosystem with some additional upgrades coming very soon as well. The ecosystem, not just for Bitcoin, but for Stacks, is continuing to grow and thrive. 2024 saw a spark, a boom of applications and developers across the entire world, Asia, the US, Europe, MENA, Latin America, and much more. Today, we're starting to see that continue to grow and harden around the required infrastructure and technical stack towards seeing Bitcoin be productive. This is not something that we're just recognizing on a developer, a team, a founder, or a protocol scale, but we're also seeing adopted across institutions, small and large globally. That suddenly Bitcoin, once a sleepy asset, a store of value, digital gold, is now awakening to being a productive asset. And there are tons of great companies across the industry, Stacks, those building on Stacks included, and Stacks as a network, as infrastructure, powering this next opportunity going forward. So for those of you looking to engage and looking to make your first entrance or continue to expand your exposure across the greater Bitcoin ecosystem, I leave you with this today. Stacks continues to lead the entire building on Bitcoin movement and is positioned to further innovate and double down on research and development to power Bitcoin's DeFi future. SBTC and its coming upgrades, moving from trust minimized into a trustless environment, will further unlock not just that 1.5% of Bitcoin's total market cap, but 5% and greater of Bitcoin capital that today is looking for a core Bitcoin yield. With 5,000 and more Bitcoin already deployed, we're looking to continue to grow and increase that as well. As a blue chip asset and layer across the Bitcoin ecosystem, having been in this and our team and original founders being in Bitcoin for over a dozen years, we've got a thriving developer ecosystem and benefit from a ton of cutting edge R&D along with advanced revenue models as well. We welcome you into the Bitcoin ecosystem and hopefully into the Stacks ecosystem and SBTC as more. And would love to have some additional questions. I see some coming into the box. But if you'd like to learn more, please do reach out to myself, Kyle Ellicott. I'm on Twitter. There's my Twitter handle. But also check out all of our documentation at stacks.co and reach out to me either via DMs or otherwise with my contact information, and feel free to book some time with me as well. Thank you. Hope to see you across the Bitcoin ecosystem as we mature. Thank you. All right, I see a few questions I'll try to answer real quick. Paul, excuse me, are we seeking investment in any plans for equity offerings? So to be very clear and transparent, Stacks, prior to our mainnet, that token offering we did with the SEC, in that structure, it was deemed that our token supply would be distributed upon mainnet. So in 2021, the tokens were pushed out into the market and now are freely tradable across major exchanges globally as well. So STX as an asset is available out there right now. We are talking to investors on a continuous basis on how to enter the ecosystem. And those that are asking those questions, I'd be happy to talk to you one-on-one about today and future opportunities as well. SBTC right now is a capped program. That cap sits just over 5,000, one of the largest across the entire ecosystem. We are looking at future caps as well. So if you are looking at or interested in participating with your Bitcoin, please do reach out. And yes, those opportunities will be coming very soon as well. How does one participate with Stacks or SBTC? So for participation with Stacks, it's available on major exchanges. Today, you can go and purchase STX. If you're looking to stack or stake it, there are plenty of pools. There's plenty of staking providers, also wallets, Xverse, Lether, and many others that if you hold your STX, with one click, you can begin earning that initial Bitcoin yield for securing the Stacks network as well. And again, other staking providers. With SBTC, you can go to bitcoinismore.org. Stacks.co will point you to that as well. And as soon as that next cap opens, there will be an opportunity. Today, SBTC does have withdrawal functionalities, so people can enter and exit the SBTC. So that cap, while stopping at 5K, is available as well. So please do reach out if you're looking to learn more or you want to participate in SBTC today to start earning yield on your Bitcoin or in the near future. If you're looking to learn more about STX and how to participate, whether it's on an exchange or otherwise in future opportunities, do reach out. I'm happy to guide you through that process and provide you some partners and others on where to begin. Has the whole idea of BTC changed since the high ETF inflows? When will they own the coin market? So let me start with the first half. Has the idea of BTC changed since the ETF inflows? Yes, but also let me take a step back. So in that, let me bring this slide up real quick. Hopefully this will be helpful. So during these three different eras, so Bitcoin was very much a store of value, digital gold, that early foundational era. Everything was getting set up while Ethereum And Solana and other networks were really starting to take off and showing us what was possible leveraging blockchain and then digital assets technology as a whole. That was that first dozen years. And in that time, we saw tons of applications. We saw what was possible with faster transaction speeds than that on Bitcoin. We saw the rise of non-fungible tokens or NFTs to the DeFi ecosystems and so much more. Now, in 2021, we saw Stacks enter in live with programmability and smart contracts, now being able to build on Bitcoin. And during those next 4 years, so until last year, we saw a lot of different trials and errors and excitement and opportunities built across Bitcoin. But in 2023, we saw the launch of what was called ordinals and inscriptions. And that was this whole revitalization of building on Bitcoin and culture and drove a lot of developers back to Bitcoin. Enter in 2024. And the spark that went from about a dozen different layers like Stacks to over 80 different layers and protocols that all offer something unique to Bitcoin. We started seeing applications, we started seeing more infrastructure that we saw on Ethereum and others come back to Bitcoin. And with that, to the question, yes, we saw the introduction of about 12 spot ETFs. And those spot ETFs opened the doors for institutions. Prior to that, it was mostly venture capital driven, family office driven, some institutions that were investing in the projects, that were supporting the tradable assets that were out there publicly on exchanges. But once the ETFs launched, that opened up not just any institutions, or as we saw, sovereign wealth funds and others, but it changed Bitcoin as an asset class, because now Bitcoin was available to anybody, anywhere, no matter their technical knowledge, no matter their financial knowledge or access. Anybody could participate and own Bitcoin in some capacity, however they wanted to, risk tolerance or allocation tolerance aside as well. And so, yes, that sparked, along with all that exciting development and experimentation, what drove us into today. And so we saw over $40 billion in inflows last year. We saw Bitcoin's TVL, or the amount of capital that was on in applications across Bitcoin, go from 300 million at the start of 2024, just before those ETFs launched, to over $6.5 billion in that year. So the ETFs go from 0 to 40 billion. Applications go from 300 million to 6.5 billion, of 20x. And now that's gone from 6.5 to over 8.7 billion now in 6 months. And those ETFs are continuing to see growth. We're also seeing the rise of now Bitcoin treasuries, Bitcoin on the balance sheet. So to the question, yes, the concept and the idea of Bitcoin, because of the ETFs, development, everything I mentioned, sparked this next big leg, or this dominance era of Bitcoin as well. Will they own the ETFs, the coin market? I don't know. That's not a prediction I have. I think they're a major piece of pushing Bitcoin from a 2 trillion to a 5 trillion into a much greater asset class. And for us and a lot of the work we're doing, it helped to unlock and brought a lot of that institution that otherwise didn't see Bitcoin as an asset class into it, and now looking to earn passive income as well. So thank you all very much. I'm available for questions and booking time. If you've got questions about Stacks, you've got a question about how to participate, you have questions about SBTC, you have further questions about the content, please do reach out. I'm happy to answer and point you to our partners, to those that are exchanges, and talk about future opportunities as well. Thank you all very much. I look forward to speaking soon.